Now, one variation of that scenario is we want to understand what it looks like from a discount perspective. So we're going to clear this, and in this case, there is a $1,500 community fee concession that was given. And so notice that if that's the case, then at the time of the reservation deposit, we would have only charged the resident $1,000 because that's the cash that they paid. So we charged them $1,000 in cash, and they paid $1,000, which is why on our balance sheet we have $1,000 in the bank, and we have $1,000 as a liability as a reservation deposit. And so when we go through our steps and checking the ledger, moving in the resident, and then getting to where we're going to post the charges, that next step is going to be the same, where we're now charging a prorated rent. AR increases, our revenue increases. And then now we're going to recognize the community fee income. So the reservation deposit will become the community fee income. Now notice what we need to recognize it as, because our community fee rate is $2,500. So when we hit that, we still need to recognize $2,500 of revenue, because that's what it is. The liability clears, but we also recognize with that a community fee concession, which if you net these two together, that's where the $1,000 of actual cash that we collected, which is the charge here, if that makes sense. So we know the next step is to deposit the cash into the bank. So we're going to deposit the cash into the bank. And again, these are broken into two different steps, because now we're gonna post it to the resident's account, and also putting it in the financials to show cash was received. Stressing the point of money goes in the bank first before we go into the ledger and say the resident paid, because we want to make sure that cash is in the bank. So we post to the resident ledger. Notice once again the AR clears, goes up to cash, and now we have the payment on the resident's ledger. The ledger's down to zero. We've collected the full cash or the full revenue less the incentive, which is why our cash is $1,000 less.